the day. They have announced sale of 22.5% to New York Life for 121 crores. Sahil Vachani, MD of Max Ventures, is with us now. Sahil, good morning. Can you take us through the contours of the deal? First of all, there are two-step investments into the company.
That's right. The board of Max Ventures today has approved to allot shares to subsidiary of New York Life for up to 22.5% shareholding in Max Ventures and Industries at a price of 78 rupees a share, which is going to result in an inflow into Max Ventures for 121 crores. In addition, the board has also approved the allotment of warrants to sponsors of Max Ventures and Industries for up to 5%, which will be converted in the next financial year. The total infusion into Max Ventures as a result of this is to the tune of 150 crores approximately.
150 crores is a tidy sum, sounds good, because your market cap is around 350 crores. So you're telling us you're getting 150 crore through these two capital infusions. What will be the game plan then in terms of using this 150 crore?
Max Ventures has identified four verticals for growth. The first one is in the space of education, where we are looking at the education from the kindergarten to class 12 space and looking at building schools in and across NCR to begin with. In addition, there is also a real estate vertical called Max Estates, through which we will be doing development of two large commercial or office space projects in the NCR region. And thirdly, there is the packaging or the manufacturing business, through which we have already discussed various plans to increase our capacity from 40,000 tons to 80,000 tons per annum, and dedicated towards the specialty product range in the BOPP space. And finally, there's the investment vertical called Max I, which we are using as a vehicle to make investments in early stage growth organizations in sectors with which we have affinity to.
Sahil, good morning. Where will the growth come from? Because I think you reported around 700 crores of sales last year with about a 10% EBITDA margin and a profit of just about 20 odd crores. Now, this sum of 150 crores is huge for a company with a market cap of, just a little over that.
The current business, as you described it, only covers the packaging films business. The other businesses, particularly in the space of real estate, education, and investment, are at an infancy stage and had not recorded any revenues. This capital would be used to set up and grow our education real estate business primarily, and also for a certain amount of equity in our packaging films business.
Okay, any debt reduction plan with this money?
No, this capital would be used for further growth plans, particularly in the sphere of education and real estate.
Okay, so that's the debt reduction plan. You won't reduce any debt at all?
The promoters currently own 45%, and post dilution and after conversion of warrants that the board has approved to issue to the sponsors today, the shareholding of the sponsors will be at 38%.
I just want to understand your vision in terms of what the next 4 to 5 years will bring in for this company. If all other three verticals, apart from packaging and the film business, kicks off in the next few years, what do you see in terms of growth and numbers, sales, profitability, EBITDA for the company over the next 3-4 years?
We don't give out forward-looking statements as a policy and as a group, but just to put it in context, the current revenue of the business that you spoke about is only for the packaging films business. The capex that we will put into the education, real estate, and the investment vertical will yield additional revenues and incremental EBITDAs, which are not reflected in today's numbers. Obviously, these businesses have a certain gestation period. So once we invest the capex and build out the businesses, we are confident of very robust growth in both the top line as well as the bottom line in times to come for Max Ventures.
This capital raising now, does it take care for next 3 to 4 years, or do you have more plans in future?
There will be a need for additional capital in addition to this as well, and the company will explore all avenues to raise capital in the future as and when the need arises.
And what is the kind of working capital you may need for the business?
We're not able to give a statement on that yet, but as plans get more firmed out in a detailed manner, we will be able to share the detailed capex for each vertical going forward. But definitely in terms of our growth aspirations for the education and real estate and investment space, there will be larger fund requirements as we move forward in the next few years.
Okay, Sahil, we leave it at that. All the best for the future. Thanks so much for joining us. That's Max Ventures.